the Financial Survival Network. Now more than ever.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 6/24/22, show number 403. So the Solstice rally, I guess maybe it'll be with us for the whole summer, Nick.
Could be with us for a little while. I don't know about the whole summer, but I'll say that, if anybody wants to ever learn about this stuff, I teach it. And I tell everybody, I told my members last Friday, I said, hey, we got the solstice coming up. It's a holiday on Monday, and the markets will open on Tuesday. Be ready. These markets could rally out of the gate. And that's exactly what we've seen. In fact, I have a chart here of the S&P 500, and you'll see how the market gapped up right there. And look where we are now. We're at 387 on the spiders. Cash S&P up around 38.83. So it's been quite a move. And that's very important stuff to know, when these things are going to make these moves, you could really capitalize on it.
So is this just a bear market rally? Is it a recovery rally, sucker rally, or is it the start of a new bull market?
I think it's a bear market rally, Kerry. I would love to say that it's the start of something special. It can last a little bit. Sometimes you get bear market rallies that can last up to 2 months. But I think that's all it is. It's just a bear market rally. There's been significant damage done over the past 5-6 months. So anytime that I've seen this in the past, plus it's a 2-year of a decade, you have to be very, very careful. These are bear market rallies. And sometimes, you'll get some clarity. Things will look better. Sentiment gets so bad that markets start to move higher. And I think that's the scenario that we're looking at right now. Overall, they can last a bit. So, they're tradable. I would just warn people not to overload themselves in positions. Sometimes everybody wants to get in 100 different stocks. That's not the right thing to do. Be selective, use charts, find the good technical levels, and, watch these certain industry groups that will show leadership. That'll tell you how long the rally will last.
All right. Well, I guess I can see that. So what about FedEx today? They're reporting earnings.
Yeah, FedEx had a big day today. In fact, I'm going to put that chart up for you here, and you'll see that the stock right now is trading up by over 7%. So it got to around this, almost got to $250. Didn't quite get there. I think in this rally, the stock probably has a 260 tag on it. I think that's your big resistance zone. But again, when you get a major transport company reporting earnings and having a really good reaction, that's going to help lift the markets. That's going to help change sentiment a little bit. The transports are such a big, diverse industry group. Everything needs to be transported. So when a company like FedEx has a good reaction to earnings, that definitely helps the market. And that's a good sign of leadership when the transports can get a bid like this.
All right. So what is, everything and the transports are highly energy intensive. So you have to wonder, home builders are also strong today.
Yeah, and that's another beaten up industry group as of late. Home builders have been absolutely clobbered recently. And today they're actually, not even today, but since the start of the week, they've been very strong. Here's a chart of Toll Brothers, and you can see the stock over the last 3 days has had a great move. You also take a look at the ITB, which is the iShares U.S. Home Construction ETF. Look at the move it's made over the last 3 days. So we had some data out today. I believe new home sales came out. It was better than expected. But more importantly than what the news is, it's how the reaction, what the reaction is from the market. And the reaction right now in home builders is very, very positive, coming off of new 52-week lows. So good day today all the way around. The rally is broad-based, and that's powerful, at least for the near term.
Well, I think it's interesting looking at the way that the Russell 2000 gapped.
Well, if you take a look at the Russell 2000, and we'll do it with the IWM here, you can see that it's been off the lows the last 2 sessions, and today, nice gap higher open and a run. We call that a gap and go. And now it's testing the 175 level. So if the Russell can close above this 175 area, you'll test these resistance points here and maybe even get up to 185 or even 190. That is certainly in the cards. But right now it's a good day for the Russell. I still want to just warn people, you got to take this on a day-by-day basis. because in bear markets, these rallies have a tendency to fail. But, right now, it looks pretty decent.
Right. And even gold is up today, huh?
Well, barely.
Yeah.
If you take a look at gold futures, you'll see that it's basically flat. If you take a look at the GLD, which I'll put up here, basically flat, just up a penny. It was up a little bit more. Gold has not acted well over the last few sessions. It's been a little bit choppy, but you can see it's still off these lows here, so it still lives to fight another day. And, I'll give it the benefit of the doubt for the moment. But the gold chart, everybody should note on the daily basis, has made lower highs, and it is now still below all of these major moving averages. And that's not a technically strong position. One thing I will say, though, gold miners, and I'll use the GDX for that, had a really ugly day yesterday. You can see that made a new low yesterday, even though today it is rebounding back up a little bit. Never good when you make a new closing low.
Mm-hmm. All right. Finally, let's look at Bitcoin here. What pray tell is it trying to tell us now?
Well, Bitcoin is hanging in there, and I just want to put up a monthly chart, if I may. And if you take a look at a monthly chart pattern, you're going to see that Bitcoin held this December 2017 pivot, and that's where the big sell-off occurred. And you'll see that's exactly where we are now. In fact, if you draw a trend line, and I'll do that for you here, you'll see that we're right into that level. Ultimately, though, I think we're going to go into this level right here around 14,000. When you look at your daily chart, the pattern right now is just sideways consolidation. So this lives to fight another day. It could rebound a bit from here. But overall, if this continues sideways, you're going to go down to 14,000. So I would be very, very cautious with Bitcoin. I do not like the chart. In fact, I think the monthly momentum, and I'll put that monthly chart back up now, I think that ultimately is taking us down to that 14,000 level. Just may take a little while because these sometimes can get 1 or 2 months bounces in between moving lower.
Looks like it could even go down to that 10,000 level, huh?
It's very possible. In fact, remember the last time we talked and I said, we'll have support at 27,000, and it was over here back in May, and we went even below, around the 25,300 area before rebounding back up. So Bitcoin has a tendency to overshoot on the downside. So I certainly would not rule out, when you look at that monthly chart, a move down to the 10,000 area. It's certainly a possibility.
Yeah, well, if we just go multiply, if it's an 80% loss there, it's down to 13,540.
That's where I think it's headed, though. I've been saying 14. I really think we're going to be in that vicinity.
Hey, if it's a 90% loss, it's 67.70. I really wanted to buy last time, but I wouldn't buy Bitcoin below. I was waiting for it to do the 90% loss. It only did 88. So I lost out. I mean, I was serious about buying, and then it took
right.
off.
I remember that.
Any idea?
Yep.
I mean, so here, if you can get an 85% pullback on Bitcoin, that could be a good entry point, huh?
It could be, but it's just going to be for a trade. And let me explain why I say that. If you recall, when the Federal Reserve was printing a whole lot of money, we had easy money coming in, people getting checks left and right that don't even want to work. And I don't blame them. They're getting government money. And that's what was flooding this. And now the easy money's over. So again, if you're going to trade this, you're going to trade it for a bounce. You might even trade it for some kind of ABC structure or complex chart pattern. But overall, I would not look at this to go back up to where it was. The damage on this is unprecedented. And this time around, there's no easy money fueling it. So I would be very, very careful looking at Bitcoin to go back up to 65 or 70,000 anytime soon. I'm never going to say it can't do that, but I would say it's highly unlikely without the Fed printing money like they were doing over the last couple of years.
They'll start printing again at some point. The pivot is coming, Nick. They have no choice.
That's what everybody says. And you're likely to be correct. The one thing I would say, though, is that in the near term, you just watch the Fed, you watch what they do, and you watch how this quantitative tightening goes. And when that starts to falter, they probably will have to pivot at some point. But in the near term, they have to gain a little bit of credibility, because let me tell you, they've lost a lot on Wall Street.
Yes, they have. If they had only a year and a half ago, just started 25 basis points each quarter. It's all they had to do, right?
I agree wholeheartedly. And I actually anticipated that would have started in March of 2021, and it never happened. In fact, they continued to do quantitative easing, printing 120 billion a month to buy mortgage-backed securities and U.S. Treasuries. Meanwhile, real estate was at all-time highs. So, they just continued to fuel the bubble. And yeah, they deserve all the blame that they're getting right now.
Hey, well, hindsight's 2020. I'm not saying there is any way necessarily for a soft landing in any circumstances with that much money being printed at once, but they should have been planning their pullback, their exit strategy back then. One thing we don't really talk about, we talk about real estate in the abstract, but commercial real estate, office buildings, $1 trillion plus market, multi-trillion dollars, it's never coming back. It's never coming back.
Yeah, I have a chart of the IYR here, which is commercial real estate. And, you could just look at the decline here that took place from January of this year. I mean, this has gone from basically a high of 116.75. We just made a recent low at 86. And now, we're at 93. Even on a technical rebound, this doesn't really go above 100. So, again, this is going to be quite fascinating to watch and see, and hopefully the patterns play out nicely and there'll be some good tradable moves in here. But I have to agree with you. Real estate may never come back as we know it.
Yeah, commercial. Everyone's got to have a place to live.
Sure.
And I've talked to real estate experts, and to some extent, they talk their own book. One guy I talked to, New York guy, very, very savvy, Sam Liebman, I think his name was, and he's as bearish as you could be on commercial and bullish on residential, because there is a shortage of residential housing in the country. There always has been, but the price and the interest rate affect all of that. It's part of the reason why prices have gone up. Restrictive building zoning practices, high cost of money, all these things really feed the flames. And one thing we know about the Federal Reserve, it's like if there's a fire going on, look for a Fed chair with a 5-gallon jug of gasoline to pour onto it.
And just to add on that, Terry, is you've had firms out there like BlackRock buying residential real estate hand over fist for the past 2 years. You're also looking at companies like Blackstone doing it as well. So, these guys, in fact, I know people that have actually sold to them. They bought it, 25, 30% over, the appraisal value. And they did it without even getting
Sight unseen.
Sight unseen. Cash deal. Yeah. I mean, close in a week. I mean, no inspection, no real anything. It just came in and swooped it up. I mean, they've been doing this, pretty
for a decade.
For a while now, and the last 2 years more than ever. I mean, I've never seen it, and they're just purely rentals. They'll even rent it back to you, right after you close on a deal. I mean, I've never seen anything like this.
I'm looking at houses here on invitationhomes.com. I think is that BlackRock?
I don't know.
I don't remember. It's either BlackRock or Blackstone, one of the blacks.
Yeah.
And, it's like the rents have gone sky high. Here's one, 3-bedroom, 2.5 bath, 2,000 square feet, $3,185 a month. 3-bedroom. So here's one, 3 bedrooms, 2.5 baths, and 2,639 square feet, $3,670 a month. Now this is Miami. All right, hottest real estate market around. But these guys are, huge. They're all over the place, and they bought up everything in sight. And now they sit back and wait for the pivot to happen, right? That's what they're waiting for.
That's exactly what I think. And, we've seen them do this before. The last time, though, if you recall, back in 2010, 11, 12, when these big institutions were buying real estate, they actually flipped out of it. And this time around, they are not flipping the real estate. They are renting, and they are going to be landlords. And that is their plan at this stage of the game.
Yeah. Yeah. So BlackRock, they even have a real estate division. BlackRock.
They do.
Retail like broker. And all they do is go out there, say, buy everything, buy.
And I actually know people that have sold to them. And like you said, sight unseen, no inspection. And the deal closes within 2 weeks. It's pretty remarkable.
Yeah,
30% over asking price usually too.
Yeah, exactly. I'm half tempted, honestly, but I don't feel like being a renter. I mean, I just got this place, but it's tempting because you can cash out, and if I could sell a put on my house, I might think about it. But
right.
I don't want to sell it. I don't want to sell it.
As they say now, where are you going to go? And that's the $1 million question. And, again, I've been able to turn over some real estate in my life for some really good gains. But this time around, I'm sitting pat.
Same here. Well, that is it for Friday, June 24th. Make sure you go over to Nick's site, inthemoneystocks.com. See how Nick has beaten the averages for decades. The Twitter feeds at ITMS, at Nick Santiago 01, at Kerry Lutz. Send your emails to KL@kerrylutz.com. We'll get to them next week. Nick, have a great weekend. We'll talk to you on Monday.
Thank you, Kerry. Have a great weekend.